Hello, welcome to Any Answers Answered for June 2024. Tim and I have had a look through the pages of Any Answers and picked two questions this month which I think are very relevant to things currently going on in the world. One is always relevant, and we start with that one, Tim, a very frequently misunderstood area of tax. The question comes from LDS 24. We have a director who is looking to borrow an amount from the company, but with a commercial rate of interest charged. I'm aware, they say, that if the interest charge is commercial, there's no benefit in kind. But what about Section 455 tax? Is this still payable on an overdrawn loan? And the answer, Tim, is?
Yes. It is a very simple answer to give, but we decided to have a look at this particular Any Answers question because it is such an important area, and about 600 viewings of this, which indicates the importance of the topic. So J. Cresswell Tax immediately came in with that answer, yes. Before that, Juno, yes, subject to usual rules. Jeff 56 pointed out that it's yes, unless it's repaid within 9 months. And then Dougimon said only if he's a shareholder, as well as the above caveats, which was then qualified by Ruddles, pointing out only if it's a participator. So let's just deconstruct some of these points. The benefit in kind rules and the Section 455 loaned participator rules are entirely independent of each other. So it makes no difference whether there's a benefit in kind or not. If the company makes a loan to a participator, or indeed an associate of a participator, which would include direct relatives and spouses. So if my company lends £100,000 to my wife, or indeed to my sister, in either case, the company has to comply with the Section 455 rules. And then the next point, picking up on the one that was made by Jeff 56, is that if the loan is repaid before the corporation tax payday, so let's suppose the loan was taken out in December 2023 for a company with a December year end, well, the corporation tax payday is 1st of October this year, 24, and if the director or participator repays that loan before the corporation tax payday for the relevant period, then there is no requirement on the company to make the payment of corporation tax to HMRC under Section 455. So that's quite an important point. That keeps it, if you like, off the books altogether. Although it will, of course, be in the balance sheet for that year to December 23. Further point is that if it's repaid after the 9-month payday, then of course it is payable and won't be recoverable until the 9-month payday after the accounting period in which it is repaid. Also, it's worth pointing out that if the loan is in fact repaid within the same accounting period, then there's no reporting requirement. I should have said when talking about the 9-month payday that even though there's no tax, you do need to put it on the CT 600. So there are various ways that the Section 455 loan has to be dealt with, and we do need to make sure that companies comply. But we go back to the original question and the original answer. If there's no benefit because the participator pays interest at a commercial rate, what about Section 455? Is that still payable? Answer, yes, subject to the qualifications given.
As you say, an incredibly important point, very often misunderstood. Our second question this month is something which is incredibly topical. About 2 years ago, I think it was, that we started talking in lectures about basis period change, and we said you've got to be in front of this curve, you've got to make sure you understand it, we've got to make sure this hits home. I'd reached the point when I thought, I bet everybody understands this. As is always the way, Tim, people are now starting to say, can you tell us anything about basis period change? We know nothing about it. Very important that we pick up on it and discuss it. Our question on basis period change comes from SAS Kirk. And the question is, I can't find any clarity on what you do if you extend an accounting period to match the new basis period in self-employment boxes 66 and 67. Do you put your basis period as the standard part first 12 months, enter the adjustment to make your extended accounting profit 16 months, for example, equal the standard part in box? Do you know what, Tim, people have already stopped listening to me. Let me simply ask you this question. What do we need to be watching out for here?
Well, I would say you probably need my basis period reform app. I've spent an awful lot of time on this. First, working out the calculations, doing a spreadsheet that can, in an instant, tell you what the appropriate figures are, both for the standard part, which is the 12 months from the end of the 22-23 basis period, and also for the transitional part and the overlap relief and the spreading. But then, having done all of that, we got to the 6th of April this year, and agents began to look at it from the point of view of filing the return. And the SA 103F, for full, is the form for the self-employed, the boxes in which are being referred to in this question. And it is by no means intuitive or self-evident as to what should go in what box. And so initially, I produced for our own software customers a Word document setting out as clearly as I could what should go in what box. And as we record this, I'm about to sign off on an enhancement to my basis period reform app that includes replicas of the SA 103F and populates it with the figures on the basis of what the user puts in as accounting dates and profits. But let me address the particular question that SAS Kirk has raised by taking as an example, because I don't think just looking in the comments we've got any dated or numerical examples, but let me give my own example. Let's suppose that the self-employed trader has a 31st December year end and there is no change of accounting date. So in that instance, they need to complete a single SA 103 for the year to 31st December 23, which is what they would have done for the previous tax year. So that as normal, if you like, with details of expenses, capital allowances, etc. And then in box 73, etc., they would enter a quarter, 3/12 of the figures. At the moment, it would be estimated figures for the year ended December 24. And that would be the transitional amount. You then deduct the overlap relief, you get the spreading figure. That's all self-evident. But the point I'm making is that without a change of accounting date, you only fill in one SA 103 with all the detail for the year to your normal accounting date. And then the transitional amount, you'll have to pick up a quarter of the current year's profit, which will have to be estimated. But let's suppose that, as will be the case with many taxpayers, you decide to move your accounting date to 31st of March or 5th April, which to all intents and purposes are the same. Well, it depends how you do it. If you have two accounting periods, first to 31st December 23, and then 3 months, say, to 31st of March 24, what you will do then is complete two SA 103s, because you've got two accounting periods ended in the 23-4 transitional tax year. And the first of those will be the 12 months to December 23. The second will give full detail, as normal, for the year, for the 3 months rather, to 31st of March 24. And you will also enter the transitional figures. So you will have on that second one the transitional amounts, less overlap relief and the spreading. And as an alternative, you might have a 15-month accounting period. So why bother to draw up accounts to 31st December 23? Well, if you do that, you've then got a single accounting period to 31st of March 24. You only need to enter those figures for the 15 months in a single SA 103. But again, the last 3 months' worth will be entered in the transitional boxes. It is clear as mud, and I think HMRC have themselves, well, I know they have, had difficulties in programming this, and indeed one of the special cases that they recently published, I think special case 8, advises a workaround where you've got more than one accounting period ended in the tax year. So it's all very, very tiresome. We'll get over it. One particular issue that has cropped up and is referred to in this Any Answers thread is that different software houses have dealt with this differently, and one in particular initially made quite a hash of it, but not surprising given the complexity of this transitional year.
And I think the sooner we start to look at this, I mean, I've been saying this for years, but the sooner we start to look at this, the better, because we need to make sure we're on top of it. This is simply not something that you can just leave till January and hope it all pans out okay as you do the returns. Look at basis period in the very near future. Make sure you've considered all of the issues. Next month, who knows? Perhaps more basis period questions, perhaps election related questions, who knows? But for now, bye-bye.